Good morning, everybody. We're going to wait a couple of minutes here. So, Roberto, I am not going to allow autopilot. That is in violation of my right for owning this broadcast. It becomes public property. So I appreciate that, but I'm going to head and deny that. Let's see how many people we have on. All right. Many, good seeing you again, sir.
Thank you, Tom. Good afternoon.
Good afternoon. Joel, thanks for being persistent. Really appreciate that.
Yeah, I just was able to log in literally a minute ago. I'm not a techie, as you can tell, and by my age as well, but I was able to get in, so I'm looking forward to it. Thank you.
Well, the older we get, the less technological advanced we become, right?
Yeah, you know what? You do what you can, and if you can't, you find somebody in your office who can.
That's if you're in a big enough office. Sure. All right, so give this a couple of minutes. We've got about 35 that are registered, but at about 5 after, I'm going to go ahead and get started. Let me kind of set the ground rules, what we're going to be talking about. This really is the last freebie weekly wisdom tease, if you will, that we're going to have. The rest are going to be explained at the end of this 1 hour. So I'm hoping everybody sticks around and looks at what our opportunities are about working together moving forward. But really what I have found in almost 50 years of doing this, top of the table producer, et cetera, writing about 50 million in premium over the last 10 years, it's really getting easier for me to sell insurance than it ever has. And the reason it's getting easier is because I've gotten better at my craft. It's not sales language, and my God, it's not buying leads. If you watch the weekly wisdom that went out, I think it was yesterday or the day before, it was all about leads. The industry says we need more leads. No, we don't. We actually need a better conversation. When I speak publicly, I'll ask the group of advisors, how many appointments did you have, or how many people did you see last week? And we'll get various answers from 3 appointments, or they answer in the form of appointments, or 10 appointments, or if it's Van Miller's response, it's 50 appointments last week. But that's not the question I'm asking. The question I'm asking is, how many people did you see? On average, we see about 150 people a week. Unfortunately, have very little to say to most of them. So last week's weekly wisdom was about how important is it to have a conversation starter over really just buying leads. And these conversation starters are really what this weekly wisdom idea is all about. It's going to be the opportunity to engage in conversation anywhere, anytime, with anyone you see fit to start a conversation. And really what I'm trying to do with these weekly wisdoms is I'm trying to become a person of interest. I'm trying to create an opportunity where someone I'm speaking with wants to meet with me to hear the rest of the story. And I think this is the most important part of what it is that we do. We have to create interest, because if we don't, we're just shoving product down their throat. And you want to give the industry a bad name? Keep doing that. Oh, you sell insurance? Oh, listen, I've never found a better career choice. I've never found one that pays exactly what my time is worth. When I started this business back in the 70s, I worked with my dad, and it was kind of cool because he said, son, this is the only job where you will be paid exactly what you're worth. Not a penny more, nor a penny less. And if you think of a corporate job that offers a bonus, really what's happening is the corporation is going to give you a salary discounted, hoping you do what you should. And then when you do what you're supposed to, they give you the amount that you should have been paid up front. And you call it a bonus. So when you look at what it is that we do, we become effective when we understand what our job is. So these weekly wisdoms I'm going to be talking about are different subjects, different contents, different examples of ideas that you can use to start a conversation anywhere at any time. Some of the most successful meetings I've had have been totally impromptu. I didn't call someone, I didn't buy a list of rich, stupid people and call the first person on that list, hoping that I struck someone who didn't know crap about nothing, but he had a lot of money. Let me help you with this, people. That list does not exist. People who make money are somewhat pretty intelligent. And if you think you're going to use fancy language to convince them to do something they don't want, don't need, or can't afford, that's not going to work. It's just not going to work. These weekly wisdoms, I'm hoping everyone on this call gets an opportunity to take one or two that you really like, mold it into who you are, build stories around it so that you could begin a conversation anywhere with anyone that you see fit, that you want to work with. When you realize in your career that you are the buyer in this relationship, that's the first thing I teach in the Breakaway League. Stop selling, become the buyer. A lot of people don't even know what that actually means, so let me kind of help you with that. I look forward to choosing if I want to do business with someone. Think about that. When I started, my dad gave me a rate book and a phone book and said, mate the two. Hopefully you will be successful as well. Well, man, that's hard duty. I would rather polish conversations that are interesting to people so that they want to hear the rest of the story, as Paul Harvey would say. I want to become a person of interest so that I can tease you with an idea so that you will tell me, and I cannot tell you how many times I've been told this, I need to meet with you. Yes, you do. You have problems associated with what you are trying to do in everything. You just are not aware of them. I begin with the end in mind. I know exactly what financial euphoria looks like. I know what it sounds like. I know what it spends like. You don't, because typical financial advice, sometimes the more successful you are, hurt you. This idea, I live in Nashville, with this radio head that says pay cash for everything. Probably one of the most financially incorrect assumptions, the more wealth you wish to create. If you truly want to beat inflation, the answer is to get in debt. Now, I know that sometimes might be hard to assume, but let's go through this for just a quick second, and then I'm going to talk about this week's weekly wisdom. When I borrow money today, and the bank gives me $1 that I know today to be 100 pennies, and those idiots allow me to pay them checks in the future that are worth pennies on that dollar. Have you ever wondered why the bank charges less interest on a shorter term mortgage? It's not because of less risk. It's because you were convinced to give them their money back sooner so they could turn around and lend it to somebody else. The banks are dumb enough to lend me $1 that I could pay them back over 30 years because the dollar that I write dated 30 years from now might be worth 20 cents. That's why they want you to pay back more. Round up your payment. Pay your bank off sooner. If you're trying to develop wealth, a home might be the worst place to develop it. I remember I was speaking to a very, very successful agent in the insurance business, and he said, do you look at your home as an asset or a liability? And I went, wow, what a great conversation. Assets produce an income. Your home is nothing but an expense. Payments, interest, maintenance, insurance, that you get back zero when you go to sell it. So let's talk about today's weekly wisdom. It's the 3 questions every one of us should be asking our clients at the beginning of every single appointment we have. And these questions, because the person I'm speaking with has no idea why I'm asking these questions, I'm asking them because I want to know where they stand financially, emotionally, financially. Not where they are dollars and cents wise, but what they think about the world, what they think about the economy, and most important, what they think about themselves. And I want them to vocalize for me what's going on in their head without the conversation being polluted or influenced from a professional advisor. Here's the first question. And really, it's designed to just kind of set them at ease and help them understand the benefits and the value added we bring to the conversation. Is it your goal in life every year to make more money than the preceding year? Is it your goal every year you're in business to make more money than the previous year? Now, of course, I'm hoping the answer is yes, because that's why they got the appointment with you in the first place. Because if you're in the financial services world, then isn't that your job? To help them become more successful? And when we talk about being more successful, let's talk about that for a minute, because people don't understand what that actually means. The IRS has a different definition of success than you do. I do a newsletter, and one of the inputs in recent months was there are people that are polled that make over $250,000 a year that say they're broke. They feel broke. Well, I can see why. I can see why. If they're putting money in all these places that don't matter, that don't actually affect their bottom line in the future, yeah, I can see why they feel broke. It's important to have people basically want to be more and more successful. And this is where the conflict comes in. The more successful you are, the more detrimental typical financial advice will become. Get to that here in just a minute. The second question that I ask, do you believe that not only if income tax rates go up, as you make more money, we call something the progressive tax system. Is everyone aware of how even if the tax code doesn't change, if somebody is making more money over their lifetime, what happens to their tax bracket? See, you need 60 votes, I think, in the Senate to be able to change the tax code. But think about this for just a minute, people. I don't have to change anything to be in a worse tax bracket the more money that I make. So the second question, on the day you retire, would you like your first retirement check to be at least as large as your last employment check? Another way of wording this is, would you like to remain in the world that you built so far? Would you like to be accustomed to that success after retirement? Now, let's go through that question here for just a minute. The government says you only need 70% of your income to remain in the world that you've been accustomed to up to and including the date of retirement. You don't contribute to Social Security anymore. You don't contribute to lunches or new clothes. You don't need food at work. You don't need a new car. You can live on 70% of your income. I love this analogy. If you have a client that's convinced they're going to be in a lower tax bracket than they are today, have some fun with them. Ask them to take 30% of their paycheck and burn it. Burn it. Don't set it aside so you can go reclaim it later. Set it on fire so it's gone. That's what retirement looks like. If you finally believe I'm going to retire in a lower bracket, try it now. Just for craps and grins, try it now. It isn't any fun. In 50 years of doing reviews with clients, never once on an anniversary review was there a bullet point agenda item that said, Tom, make sure I retire broke. Or for that matter, it never said, Tom, make sure I retire in a lower tax bracket. I've never had a client that said they want less. See, what I'm trying to do by asking these three questions is getting people internally to recognize what they want is never going to be achieved based on the direction they're going. And that is simply because everything we're doing is detrimental to success. Defer, 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 deduct, 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 defer, deduct is not a retirement plan. It is a tax trap that will force you to pay more tax than you've saved.
What?
I'm going to give you an example. No, I know this is unrealistic, so stay with me here. If I put $10,000 into a 401k plan, and I was able to save $10 or $1,000 because according to the radio heads, you should be maximizing your 401k when you have no credibility, no debt, build that retirement plan. So I'm putting $10,000 away and I get a $1,000 incentive. I call it a loan from the government. My broker dealer, when I was a registered rep, prohibited me from using that term. Really, they're lending me the government's money. Now, I made the mistake of becoming successful, and I have retired in a 37% tax bracket. And on that $10,000, as an example, let's assume I invested it and got no growth at all. Unrealistic, and you could do better in a 0.25% passbook savings account. I get that, people. But I want to emphasize, here's how the IRS treats that $10,000 withdrawal. Now, you were incented by giving $1,000 as a credit. It's not a credit, it's a postponement. Now, that $10,000 will now, upon pulling the money out, create a $3,700 tax bill at the highest tax bracket today. They will go back and take an additional $2,700 from every deposit you made in that lower tax bracket. Is that really what you wanted? See, by asking these questions, I'm trying to get somebody to recognize I want to succeed. I want to succeed. And I do want to retire in the same level of lifestyle that I've enjoyed up to and including that date of retirement. And here is the third most important question. Do you believe, with $35 trillion of federal debt, that personal income tax rates are going to have to go up? Now, I don't care what side of the political aisle you're on. This is not a political conversation. This is a real conversation. 25 years ago, there was $4 trillion in debt. Now we're at $35 trillion. Better than inflation. IRS always wins when there's inflation. You may not. And when someone says, well, yeah, I think taxes are going to go up. So let's kind of review what we just said by asking these three very simple, non-threatening questions, very simple dialogue. Do you want to make more every year you work? Do you want to retire at the level of success you've achieved? And do you think over your lifetime that personal income tax rates are going to go up? Yes, yes, yes. Well, let me tell you what you just said. Now, contradicting everything you've been told in the financial professional world, today represents the lowest income tax bracket of forever. Forever. It's not going to get any better the longer you live. It's going to get, you just said you want to make more, you want to live successfully, and you think rates are going to go up. How can you win the game when the rules are stacked against you? We have a sales presentation that takes about 3 minutes. And we talk about every time your money doubles in a qualified plan, the IRS will exponentially make more money than you will. I want to be the government on this type of arrangement. I'm going to lend you $1, you owe me 16. You get the investment and you double or triple your money. I get multiples of my money. Here's the beauty of these weekly wisdoms. It's going to be not only an opportunity to see what we're doing on a weekly basis, sales bombs, ideas, concepts, etc., conversation starters, if you will, but we're going to, on a weekly basis, allow everyone an opportunity to be on a Zoom meeting like this where you can ask me all the questions you want to as to how you would implement it. What would you do if they said this? What's the purpose of your meeting? What is the objective of what you're trying to accomplish? What happens if it goes sideways? What happens if? You're going to have that opportunity if you engage on a weekly basis. Before we get into anything else, I'd like to open this up to conversation. Tell me a little bit about what your impact is when you registered for this, what some feedback was, what your expectations were, and more important, this type of ability where you could ask someone who's been in this business for 50 years how to handle a conversation starter. What does that mean to you? So if you do want to ask a question, all I ask is that you please unmute yourself, fire up your camera so we know who you are. Melissa, I'm curious about your question. So the volume of interest it doesn't matter. What do you mean by that?
Oh, just in the beginning, you were talking about let's see, paying off your house sooner, the bank's, giving you the 15-year loan versus the 30-year loan, pay it off sooner. I've sat through trainings of the volume of interest that you actually pay on your mortgage, hundreds of thousands of dollars of more than what you actually, the purchase price. And so if you're sitting on a 2.75% interest rate, that's super low. I get what you're saying, because you're locking in that dollar, the value of that payment at 2.75%. So you're locking that in, just like with my baby policy for cash value life insurance. When I was 6 months old, the premium was $31 a year. Well, now I'm 54 and my premium's still $31 a year. And so it would take like $220, probably $225 today to equate to $31 54 years ago. So I get you're locking in the value of that dollar. It's cheap money, but it's that volume of interest that was shared with me, that calculation. So does that not matter? Because that's still hundreds of thousands of dollars you're giving to the bank in interest.
Okay, so so the real question is, if I pay the house off, or if I pay cash for the house, I'm saving interest. Fair? Is that what your question is?
Right. And then you can use that payment that you were making, and you could save it and grow it, like as in a premium towards a life policy.
But if you can have both.
Right. Except for, if your house payment's $2,000 a month and you don't have another, you could do what? If you have another $2,000, do that into life insurance. But what if you could do $4,000 into life insurance because you paid off your home? But again, it's just that I'm earning more than 2.75.
But let's get arbitrage out of the equation for right now, because only in the last 2 years has arbitrage even come up into a conversation. For the previous 30 years, you couldn't borrow money and get a better rate of return pretty consistently with a lot of accuracy. So now apparently you can. And as rates come down, I'm hoping people realize having $1 invested in the bank is really not the best place. Now, and Melissa, this goes back to, you look at your house, your primary home, as an obligation or as an asset. And again, I'm quoting the guy who wrote the book here in Nashville. He's now saying you should get 12% safe withdrawal rate. And again, that's kind of stupid, but that's what he thinks he's doing. So and I'm using his numbers in his most recent book. If I borrow at 6%, is it 6%? Not really, because I'm in a tax bracket and I can deduct some of that interest up to $1 million of mortgage. So if I'm in a 37% tax bracket, the government's going to buy almost over a third, will pay for over a third of my house payment. Now I take what was going to go into the bank and I keep it. And I invest at 6%. Yep, I'm going to owe income tax on that. So at 6% mortgage, 6% savings, it's a push. However, what about opportunity? I was listening to a radio show of his one time when a very, very disheartened caller was on, saying, I follow your advice. I have 6 months in savings, but I am being told I'm going to be sued for child custody. And I don't have enough money to defend this lawsuit. What do you recommend? But I've been paying my house off. I've only got X number of months left. All my money is in the bank, in their mortgage, right? My house is almost mine. What do I do? And he's got a radio volume that and this is what he said: whenever I'm confronted with the problem, up comes the volume, and I don't really know the answer, I look for more alternatives. We'll be right back after this special announcement from some sponsor. This woman lost her home, her kids, because all of the money she had was in 2x4s and the bank was not going to give her money back. What a lot of people do not understand is when I round up my mortgage and I make that payment 17 cents more than what they're asking, I cannot go back to the bank and say, look, I paid you just a little bit more than I should have. Can I have that back? You'd have to fill out a mortgage application with a credit score, with the credit application, with an appraisal, with tax return for 17 cents. I personally, I do not want to own my home. Now I have a cottage on a lake that I do want to own because that's going to my family. But on the day that I'm no longer breathing and my wife is not with me and we're both gone, there's a for sale sign in the front yard. Why do I want to make the bank happy? And I don't get any deductions because I paid it off. So it's not necessarily just what is the arbitrage potential. But when you look at wealth, you're never, if you have your house of your dreams, you're never going to sell it anyway.
Yeah.
And you can't shave off a couple of coupons and go back to the bank and say, can I have some of that money back? Sure, here's a credit app, and yeah, we'll do it. Sure, yeah. But it's about 45 days of underwriting. I want to keep control of my money. That's the whole beauty of what this whole strategy is that we use. It's collateral. I would rather have $1 million of equity and collateral in my life insurance than $1 million of equity in my home. It takes one phone call and a form to get the equity out of my life insurance. And I don't get the money out, I'm borrowing against it. Same thing with a house. Most people do not realize you can't get equity out of your home.
Oh, I know. I know that very well.
Yeah.
I have a crap ton of equity in my house and it kills me. And it's like, God, do I sell it and move just to get the equity out? I don't want to sell and move.
But Melissa, there's your story. That's all you have to tell someone who is telling you, I want to buy a 6-year mortgage. And my job is not to make recommendations or give advice. I don't do that anymore. What I do is I help you understand, here's where you are. If you make this choice, here's what's going to happen. Now, here's where you are, and here's what you could experience if you did something different. Which of these would you like? And I really don't care which one you take. I'm not in this. I don't have a dog in this fight. It's all about you. What do you want? And I would use that story. Now, even when you say that, someone's still going to say, I don't care. I want an 8-month mortgage. Okay. All right. My job isn't to change anybody's mind anymore. I got out of that about 8-9 years ago. My job is just help you understand the implications of the financial choices you've made and give you options of financial options you have that the IRS will afford you. Some will, some won't. So what? Very few people understand that. We laugh at it. We think it's cute, but very few people understand the implication of what that actually means. Great question, Melissa. Anyone else? No such thing as a stupid question.
I'll ask another question.
Okay.
A prior, I think it was last week. You said the 6 enemies in line to get your first dollar, federal tax, state tax, Social Security, Medicare, advisor fees. What was the last one?
Local tax, if
Oh,
any.
local. Okay. Local tax. Okay. Federal,
State, local, Social Security impact, Medicare premium, advisor, then you. You're paid 7th in line depending upon where you live. I've got one of the weekly wisdoms on the site is the day you retire and the city you retire in could have more of an impact on the quality of your retirement than the investment that you're in. So if we really understood sequence of returns, if we really understood how taxes affect our wealth, a lot of people move. Ask California, ask Illinois, ask New York. Why do you have an exodus of people leaving you? It's too cold. Yeah, we're at the warmest winter on record. It's not the cold, it's the taxes. So what are they going to do? Gavin decided to raise taxes in California. There you go. That's the solution. Wow. Wow. I will tell you this. The more your client knows about how wealth works, the more of an opportunity you have an effect on their life. Let me say that again. The more your client understands the rules of the game they're trying to play, the more value add you bring to the relationship. As a fiduciary, you're not required to help people understand the implications of the choices. You're required by law to explain how much commission you're going to earn and whether you have a conflict of interest. If tax rates go to 95% or 94%, as they did in the mid 1940s, you can't sue your financial advisor for putting all of the wealth you can into a qualified retirement plan. Oops, taxes are taxes. You should have asked your advisor. Well, the advisor doesn't have to tell you about taxes. I was forbidden to talk about taxes from my broker dealer. Can't talk about. Why can't I talk about the number one reason why people with money die without it and have less when they're alive? Taxes. You're not an accountant. You can't talk about that. Okay. Well, I gave up my registration so happily, and now I can have an honest conversation about how everything works, the good, the bad, and the ugly. And my job is to simply say, if you need help in anything I can offer, I can assist you. But I'm not going to shove something down your throat because it makes me money and you lose. That doesn't make much sense. So this is a lot of money and every dime of it is yours. And if it doesn't make sense for you, it won't make sense for me. Mehdi, were you going to ask a question?
Yes, sir. Actually, can I share my screen? Sorry about that one. The reason I prepared the case, I'm serving the policy. That's a policy issued 1970. That's a 53 years old policy. And I want to explain that my problem, as I mentioned last week, is a belief. That's why last 15 years, I switched from the whole life to max funded VUL. But still, I'm saying you promoting the whole life. I want to see, am I wrong, or help me to believe the whole life still can be compete or be a good product if the purpose of life insurance is accumulation and retirement planning.
All
The
right.
question is, if our, the purpose is, the accumulation and we want to, making big money, why should I, invest on whole life? That's why I prepared, cases that I'm right now serving in that one. That's a 53 years old whole life policy. Can I share it?
Well, I don't need to see that because Kinder's laughing his butt off right now because he knows how I feel about this, and I don't want to squash your enthusiasm. I worked for a company that sold nothing but variable life, and for 17 years, really the only entity that made any money was the insurance company. I have a degree in life insurance, which they don't even offer anymore. But I had a test question back in the 70s on how universal life works, whether it's fixed, indexed, or variable. How does a universal life type product work? And it talks about the policy fees, the administrative expenses, and the mortality charges. I use a limited pay whole life, Mehdi, which I don't see a lot of people doing anymore. They use life paid up at age 100 with paid up additions, and they have a premium due every year. The reason why what we do works so well is that the premiums stop. There are no more premiums. You cannot pay in any more money. If the insurance company miscalculated, oops, it's their fault, not mine. I get a guaranteed growth. I have $3 billion of clients' money that's not subject to political influence, not subject to stock market volatility, guaranteed to be worth more every month, and not a penny of it will ever show up on a federal income tax return. I can't say that when I sell variable life. Variable life, you said beautifully, if you go back to this recording and listen, it's a good of accumulation vehicle. Yes, it can be. It also sucks when the market's down 22%. And if I should retire on the day the market dropped 22%, oops. See, the older I get, the less excitement I get over surprises. I don't want any more surprises. I don't want to have to guess what is the index going to average over the next 10 years? What are the investments I'm going to be in average over the next few years? I'm borrowing against an account that's guaranteed to be worth more every single month. I can't say that with you.
But I want to say, 53 years old policy, that was a premium was $868. In the first 10 years, contributed, $8,000. If he bought just only S&P, that was $1.2 million. And if he bought, a McDonald's share, that's a 2.5 million.
You
If
cannot,
took
well,
out
hold on.
one, that was $7.1 million and never, contributed any more to that policy. And today his policy is one is $14,000, another one is a $55,000, and total accumulation is just only $80,000.
Well, I have no, okay, I don't want to get into this any further. I have no idea the company that you're using or that those policies are from. Don't say that here on this
No,
line.
I'm not saying that one. Just only I want to say, even if he's not paying, his, premium is only, cost base of the policy is only 40,000, and he can earn, cash value is at $80,000 rather than earning, $1 million and paying $400,000 for cash.
If I woulda,
Scenario
coulda,
is
shoulda, mighta, in hindsight, every one of us on this call would be billionaires. If I'd only bought McDonald's, geez, if I only had Tesla stock. What about Amazon when it was pennies on a dollar? Look, if we're going to compare what has been around for hundreds of years to some individual stock that kicked ass over the last 30 years, I don't even want to have that conversation.
No,
I
no,
think
I'm
it's-
not
I
going
think
to
it's
do
unreal.
that, but I can compare with the, measure of S&P 500 over 50
The
years.
S&P 500, you cannot buy the S&P 500.
I can get a fund, fund in
Yes,
the
and you're going to pay a
variable,
fund charge to get into the S&P
and
500.
that's almost cheap. Cheap fund is a 12 base fund. 12.
It doesn't matter. It doesn't matter. You've got cost of insurance. You've got electric bills. You've got expenses with every
1,000
company.
insurance. Yes, I know about that's a
So-
lot of cost.
Okay, look, my job isn't to change your mind. You want to sell all the variable life you can? I think that's great. You're going to find some of these weekly wisdoms that will pertain to variable life sales. Own a couple, mold it around what you believe, and go out and kill it. You can kill it. I've been doing this for 50 years. I've sold variable life for 17 years. I will never sell another variable life as long as I live. Now, that's my opinion. That's only, and it's one opinion. And you know what opinions are? They're like everything else, worthless. So you need to lead with what you believe, why you believe it, to whom you wish to share, the benefit they could get or will get, and then find people who simply believe as you do. And when you do that, man, I'll tell you what, this industry is so large. There are places for every product offered. Variable, universal, term, permanent. There's a reason why every insurance company has 3 or 4 different choices. They function differently. They have different objectives. It is almost impossible to compare the distribution of unique products around a universal life platform to the distributions that could take place in a permanent guaranteed contract. But Mehdi, here's an example. Why don't you talk about what if you took a loan and invested in the S&P 500 for the next 30 years of your life? Now you got both. And I don't know the company and I don't care, but if it's not direct recognition, the insurance company won't penalize you for having a loan. Now you've got $2 working for you. See, I think the myth that most people have when they think about life insurance is simply that I'm going to make payments for 30 years, never look at it, never look at the opportunities of it, and then ask myself, what should I have done different? Everything different. I think the biggest travesty in our business is we never have conversations with our clients about how to use the cash value that's in their contract right now. All we do as an industry is talk about give us money. Give us money. We'll show you annual statements. We'll show you performance, and we'll just absolutely confuse the crap out of you thinking you're doing well. We very seldom talk about the benefits of using that cash as collateral and doing something else with it. I want to give you a quick story. There was a gentleman who was a physical therapist in New Orleans, and Katrina had just come and absolutely devastated southern Louisiana. He was 16 feet underwater. He did not want to leave New Orleans, and he had a brand new physical therapy practice. The tar had not cured, 16 feet underwater. He did not want to leave New Orleans. He wanted to buy a stump grinder. Now, this is the kind of stump grinder in the back of an F-250. It's not a portable handheld. He wanted to engage in another business occupation. And it was at that time, I'm telling you the age of the story, the truck was $65,000. So he goes to his bank and he says, I need to borrow $65,000. And the banker says, sure, here's a credit app. And he goes, what do you mean a credit app? I'm an excellent client. Yeah, I know, but by law, we need the credit apps. Go ahead and fill out the credit app. First question, income. I don't have any, you moron. I'm trying to get a job so I can get some income. Not good. Not good. Second question, assets. He wrote on the app, underwater. Let's go in a John boat. Let's look. That's the front door right there. It's underwater. So the bank said, nope, loan declined. He borrowed $65,000 against his cash value life insurance contract, made $387,000 grinding stumps his first year. What's that rate of return? Did that perhaps beat the S&P 500? Look, it's about collateral capacity. How much money could you put your hands on at any given time without an underwriting process? Well, he got his money in what, 4 days, 5 days, bought the stump grinder, made a fortune. What's the rate of return? It's good. So rather than throw the policy out, the policy of whole life at 53 years old should be set in gold. Borrow against it. That's what it's there for. People who don't use the cash value in contracts as collateral to do something else with to increase their net worth are literally missing the boat on why you would want to own permanent life insurance. I don't care what the form is, whether it's fixed, universal, or variable, or permanent. Variable premiums, fixed premiums, limited pay contracts, life paid up at age 100, life paid up at age 121, they're all good. They all have a purpose. But to compare one over a 50-year period of time because I coulda, woulda, shoulda, I don't think is a fair comparison. I just caution you.
You teach me a new thing. Thank you.
You bet. Again, Mehdi, one person's opinion. Don't think of it anything other than that. All I want you to do, the whole purpose of Weekly Wisdom, I want you to think. Think. And again, it's one person's opinion, but if there's something in there that you can use, my gosh, go use it. Our industry is failing miserably. We have insurance companies that will spend hundreds of thousands of dollars training people, acknowledging only 8% are going to survive. My God, what if I could make that 16%? By just helping people understand it's all about conversations. It's not about lists of stupid people. It's about how to engage in conversation. Start with what you believe, why you believe it, to whom you wish to share that belief. Start with that. You will become attractive to many, and you'll turn some away. And that's good, because those people you've turned away never would have bought from you in the first place. How quickly do you want to know the person you're speaking with will never buy from you ever under any circumstance? 5 minutes, 5 hours, 5 days, 5 weeks, 5 years? How many of us get a phone call on a Friday at 4 o'clock, look at our phone and go, oh crap, it's you. You took them. You took them. Hate to break this to you. There was a time you should have recognized, cut bait and run. This is a monster in disguise. Leave. Go somewhere else. Your job in life is not to find people who need to buy life insurance. Your job is to find people who believe like you. What do you believe? And that's what's wrong in our industry. We have very few things we can viscerally believe in. I believe life insurance is good in all forms. I believe annuities are wonderful. I believe mutual funds are great. Okay, pick a lane. Pick a lane. Own it. I have not met many people at the top that are general practitioners. Most people, then when they get to the top, pick out something and they own that lane. And they own it because they've spent time researching it and making sure that they know everything about it. That would be my advice to many. Any other question? Once they've answered your 3 questions and you have determined you're willing to work with them, where do you go from there? Beautiful question, Tom. I love to tease people, and if you hang around me enough, you'll see that. I love to throw out little bombs because I know the answer. And then I know their answer is going to be exactly the opposite of what they thought. So here I'm going to, depending upon who I'm talking with, where I am, whether I have time to explain or expound on my belief, or do I just cut to the chase and want to get to an appointment. I normally like to tease. Because if you do believe that today represents the lowest tax bracket, I turn right around and ask the client the question, could you please help me understand then why you are in a tax deductible retirement plan? It's literally that simple. And I want to watch their reaction. And this is usually the reaction I get, Tom. I never thought about it like that. Well, again, look, my objective when I meet someone is to create curiosity. I want to have conversations that other financial advisors are not talking about. I want to have conversations about putting them first, not me. I want to have conversations with helping people understand what they're doing with their money is the exact opposite of what they would do if they knew the rules of the game. And when you think about it, Tom, we've got people with hockey pucks coming to the baseball diamonds screaming at their coach to want to play. And they're not even in the right hemisphere. So usually, depending upon the circumstance I'm given, I would like to throw it back and tease them and help them justify, wow, I wish I'd have known this sooner. Yeah, I bet you did. But now you are here. What do you want to do with the information you've just been shared?
Can I interject? Because Tom Rennick, that was a beautiful question. And Tom Love, this is a good response. I want to know now, how do you get somebody who's 54 or 64 to, well, let's go with 54. They're not 59 and a half yet. They've got $1 million in their 403B, 457 combined, and they don't want to pay a penalty. They want to convert some to Roth, or they want to maybe buy into some life insurance. How do you show them taking a penalty, or how do you show them stop doing that, just stop contributing and start doing something else at their age? Because life insurance is a long-term gig. How do you convince these older people? Now, I don't know, and that's why I'm asking, how do you convince the older people? And I know we're not in the convincing business, but they don't have as much time to make it look as sweet. Does that make sense?
Melissa, I'm going to help you with this. I hope you make 10 grand from this comment I'm about to make.
Okay.
The older you get, the better life insurance is. Now, you've heard just the opposite. The older you get, life insurance is expensive. Let me share this with you. I'm sure we have CLU, CHFC, BFDs on this call. I think that's wonderful. So cash value in a life insurance contract is a direct result of one event, one premium. So think about this for just a minute. If I'm 0 and I'm going to pay a policy up to age 65, I've got 65 years to accumulate the cash that I'm suggesting would be in the contract.
Okay.
Right? What happens when I put all those premiums in 10 years?
Oh,
Cash value builds. Melissa, the sweet spot in cash value life insurance is between the ages of 55 and 60. I'm not an actuary. Don't ask me why. But when you're looking at rate of return, when you're looking at value of a dollar, when you're looking at how fast a contract will go, it's between 55 and 60. The cash values grow the quickest, regardless of the age.
okay.
And I love Don Blanton's response. Well, how much insurance is this going to be? A lot. A lot. What's the rate of return? Good. Good. It doesn't matter. It doesn't matter. When I first started doing this about 20 years ago, my premiums were $26,471 on a death benefit of $914,608. And it caught the attention of the actuaries and underwriting. Why do Tom's applications, why are they so stupid? Why aren't they rounding up? Why are they rounding down? Well, here was my answer. My job is to find the inefficiencies in what you're already doing. My job is not for you to go out and get a third job so you can buy crappy life insurance. So if I found $26,971 of inefficiency in what you're already doing, that's how much I put in the contract. The death benefit is a government calculation with the smallest face amount allowed by law, so I could put in the $26,791. It's a function of my contribution. And since the death benefit is usually so much more than what they thought, it's a pretty good deal.
So 10 pay is what you're advocating. 10 pay.
10 pay is what I like to show someone is 54 years old. Absolutely. 'Cause at
Okay,
64, you don't have any more premiums. You've got
Right.
Social Security in a couple years. So, but to answer your other question though, what about the penalties if they
Right.
choose at 54? Okay, so let's address that for a minute. When I was working with another insurance company, they told us, they recommended that we build every file as if we're going to court.
right.
And I was told 4 Ds. 4 Ds. If I build every file with these 4 Ds in mind, I would have a very good chance of defending myself in a court of law. Number one, discover. Discover what they have, discover what they want. Number two, discuss in great detail. Number three, disclose. Disclose your fees, disclose the good, the bad, the ugly. Number four, document. I would have my clients sign my notes. I would put an X in the lower left, a line all the way to the upper right, and I'd say sign with big letters, your signature. I want them to know what they're doing. So when we have someone who is 54 and they have no other money somewhere else, but they want at age 64 this thing to be done, they may have to pay a penalty. Remember how FINRA, what they say, that your client is allowed to do anything they want financially, anything. But you must disclose the good, the bad, and the ugly.
Right.
Now, your broker dealer might not. If you're a registered rep, the broker dealer is saying, we're not going to take this money if it's coming out with a penalty. They have the right to do that and disqualify the sale. FINRA, as I understand it, FINRA's attitude is as long as your client is disclosed all the taxes and penalties, some people will go ahead and pay that penalty. But with permanent cash value life insurance on a 10 pay, Melissa, the cash value in year 2 grows so quickly, I never have to pay another full premium ever again.
So that was another question I had. So you could literally pay 2 years worth of premium and be done.
Well, it used to be. It's now
Okay.
3.
Now it's okay. Not bad, but that's optional. You still, if you want to, if you can pay the whole 10 years,
Sure.
like, you can
And you can make
celebrate.
your you can make your 10 years payment in year 14. They don't have to be made in the first 10 years.
Oh, okay.
I have not found a more flexible product than a limited pay whole life. And I used to sell universal life.
Sorry.
It's okay. I love these questions.
Well, you know, it makes me so mad that the older I get, the wiser I get, because I've lost 20 years of such valuable wisdom. And
Stop. That's exactly why I'm doing this.
I know, I appreciate it very much. But I kid you not, I have this drip system on leads that I bought years ago, weekly drip emails. And out of the blue, I got a call this morning. He's like, yeah, this is so-and-so. I've been reading your weekly emails. I'm like, okay. And so I looked him up real quick, his name, sure enough, he's opened every email. He's like, I'm a physician. I need this, and this. I'm like, okay. And I'm panicking because I didn't have an appointment with him, so I didn't prepare. So I'm like, okay, all this role playing, all these words of wisdom and questions and, you know, how to approach it. And I killed it, man. It was like, I role played with him and he answered every question exactly how you're supposed to answer and role play. And I kid you, so he's the one that has $1 million. And I went through the taxes, the inflation, the fees, the everything. And he was just like, oh, wow. But I'm sitting here in my head, like, how do you convince a 54-year-old to take a 10% penalty?
But listen to the way you ask yourself the question. You're setting yourself up for failure. How do you
Right.
convince a 50? You don't convince a 54-year-old.
Right.
That's not your job. Your job is to help a 54-year-old see what his potential is.
Right. Well,
Go ahead.
And my point is that I get that now. I got it today. It's like, oh my God, this works. I get it now. And I wasn't convincing him. I was just asking the questions and he's convincing himself that, wow, this isn't so efficient. My approach has not been efficient. And how he's blindly followed the masses and how, you know, these the questions I asked matter. So anyway, we're going to have another appointment in a week. He's a physician, so he's busy, you know, but he called me, and when we hung up, he wants to talk again. But I'm not pushing for that, get that next appointment on the calendar, because he's going to call me. I did a good enough job. And I make more money than he makes, by the way. He's a physician, and I made more money than he made last year. It's like, I've never been in this position before. And I've got other situations. I've got another guy, 59, and same situation. I mean, it's literally, it's all happening now. This stuff works. I followed you years ago, and this stuff works. I just wish that I were younger and could had all these years ahead of me.
This is exactly why I do what I do. I think our industry is in dire need of
Yes.
assistance. When I started, I could never speak with a Ben Feldman or a John Savage. They were always inundated at all these conferences, and you can now, even today, you can watch Van Miller on a social media platform. But to actually rub shoulders and talk about or talk with the speakers is really kind of a rarity now. I want to share with you, I've got a little PowerPoint presentation I want to share with everyone on this call. And I'm going to change also my background, because if you'll notice Dave Kinder's background, he's speaking at the forum, and I'm going to talk about that here in just a minute. But I want to show you what I'm offering everyone on the call today. Everyone can see this screen now. Would it be okay if I showed you how I can help you even more than I have today? Now, how do I get this to, well, actually the space bar is not working, so you can do this all by yourself. I've just shown you how some of these conversations can be turned into relevant conversations. These ideas, these thoughts that I have actually could be a way that you could write a heck of a lot more business. The problem is life gets in the way, family gets in the way, time gets in the way, or maybe you just need more accountability and support. What if you could work more closely with me? Better yet, what if you could have live training calls every week with me? Introducing the Weekly Wisdom live training course. You are all signed up for Weekly Wisdoms. Every week you're going to get another story, a power bomb, etc. But the only way I know that I can even help you more, get the answers and results you really need, and don't you really want everything that can happen. You know, Melissa, it only took you 1 or 2 or 3 years before you actually saw some of this come into fruition. This program is limited, so there's only so many questions that could be answered in an hour every week, and we've only got so many spots that we're going to be able to take this. It's going to be Wednesday at 4 p.m. Eastern every single week. If you want to become a member, would you pay $1,000 to make an additional 10 grand? So Melissa, you took an idea and made it into you having now not only passionate conversations with this physician, but you're coming to them from a strength position, and you're going to make a lot more than $10,000. But at this price, very few people would actually engage, and I would lose an awful lot of the people that I could potentially help. Here's the price. Are you ready? It's $4.97 a month. Now this actually turns into $1.16 a week. So for $4.97, you're going to be on this call just like this, and you're going to have an opportunity to go over not only the weekly wisdom that we have shared that week, but all of the weekly wisdoms that we're going to have in the on the website. Here's how you register. theprofessionalsforum.com/weekly-zoom-QA. theprofessionalsforum.com weekly-zoom or weekly-zoom.QA. This is what the website will look like. Now there's 2 options when you get in here. It's $4.97 a month or $49.97 once a year. This is going to be a way that I'm going to give back conversation starters so that when you're asked, how many people did you see last week? You're going to be able to say, not only did I see 100, I made appointments with 89 of them. And in these weekly wisdoms are going to be conversation starters built around primarily, what do you believe? How can you articulate better what you believe, why you believe it, and the benefits people get? But this is really this is my baby, if you will. I am the host of the second annual Professionals Forum in Nashville, Tennessee. It's going to be February 28th, 29th, and March 1st. This is leap year. It's going to be a 3-day, potentially a 4 or a 5-day, depending upon which ticket price you get. But we're going to have some of the most prolific speakers in the country talking about conversation starters. How do we engage in conversation so that we can become interesting? Remember, what's the opposite of interesting? Boring. Are the conversations and stories you're having with people, are they exciting or are they boring? We're going to have 2.5 days of meetings where we're going to be able to rub shoulders with. We've got over 10 hours where we're going to be able to be sharing, rubbing shoulders with some of the best speakers in the country. Let me kind of go from memory here as to who we have. We've got Van Miller, Jim Ruda, who is Van Miller's coach, George Segerson out of Canada. And George has been 50 years top of the table. But what's interesting about George is that his new clients today are averaging under the age of 30. So when you would think being in the business, his clientele is aged, he's going after 25 and 30-year-olds. Wendy Feldman, the granddaughter of Ben Feldman, is going to be here talking about her successes. We have Sandy Chassell. Sandy is a business coach, helping some top of the table producers get even better. We've got Turner Thompson, who is in his 80s, golfs every single day he can, 36 holes at a time, goes to the golf course and always is a single playing with a foursome. And when he walks into a room, people are gravitated toward him because of the way he speaks and the way he carries himself. David Kinder, who's on this call, is going to talk about all of the people over his career that he has had the privilege of interviewing and the things that he has taken from some of the most advanced salespeople in the industry. Arwen Becker is going to be speaking about how women who will inherit all the wealth in this world because they live longer than men, and the idea that we're missing the opportunity of marketing to actually some of the most successful people in the country are women. I will also be there. I'm going to be talking about conversation starters as well. David, who else have I missed?
That sounded pretty complete to me.
Okay. All right. And that's going to be this February. So if you want to attend, go to theprofessionalsforum.com and hit the register now button. All right. Are there any questions, any comments, any concerns that we have? How many people on the call, show of hands, are going to sign up for that $4.97 a month? Okay. All right. Well, make sure you pop on there. This is going to be the last time we do this complimentary, but we've got over 13,600 people that have registered for Weekly Wisdom. So there's a huge impact we're already having, and we've only been doing this for about 3-4 weeks. So we're pretty excited about the impact we can have on the industry moving forward. I'm looking forward to getting to know each of you a little bit better. Anyone else? Yes, sir.
2 questions, very quick. The first of all, if the purpose of insurance or life insurance is to borrow against the cash value, do you care about the MEC or not?
Oh, I don't like MECs. Of course,
Like that.
10 pays are never a MEC.
I know, but you care about the MEC. You don't want to be MEC.
No.
Right? Okay.
Correct.
And second one, you always mention in, a speech of Simon Sinek, and he mentioned before what I do, I want to, explain to people why I do it. And you always bring this one up. And I want to say, and you added on the top of that one, you sharing to people why you believe it before telling why you believe it. You know, if you believe to whole life, can you share to this group to believe about the whole life you have? That's the two things you believe about the whole life.
Well, again, Mehdi, you're asking one person's opinion. I haven't found a financial product that outperforms crappy trash value whole life. And when I go back over my 50-year career, I basically have sold everything. And the only product that is actually produced what it said it was going to do without any surprises is traditional whole life. Now, the thing I think we as an industry have failed is allowing people to understand how it works. And I'm going to give you a quick story. Because I got to be careful here. I use the phrase storm the hill, and thanks to the orange-haired guy, we got to be careful what that even means today. So back when I was on the board of the AALU, which merged with Gamma to form FinSeca, we stormed the hill twice a year. And that gave us an opportunity as trustees and board members of AALU to talk to congressmen and senators about the value and importance of financial services industry in the United States. And I was speaking with a congressman in my state, and he knew why I was there because we had to make an appointment. So I'd come into his office. He says, "Mr. Love, what can I do to help you?" And I said, "Sir, with all due respect, absolutely nothing. I don't need any more regulation. We don't need any more restrictions. We have got enough. But I do want to ask you a question." And he said, "What's that?" And I said, "Do you own life insurance?" And he got the biggest grin on his face and his chest popped out. He said, "Yes, sir, I do. I have a Guardian and a Northwestern Mutual policy." And I said, "Two of the finest life insurance companies in this country. But sir, has any of those agents ever once asked you what you can do with it?" And he said, "Why, no, Tom, they haven't." And I said, "Sir, that's what's wrong with our industry. Nobody knows what they actually have. And we as an industry have done a horrible job of explaining what can happen with life insurance. You're sitting on two phenomenal companies, probably with substantial cash values, and you've never looked at how you could use that to increase your net worth. That's what's wrong. So when you ask, what do I believe? I believe in educating people on what their choices are. I want to help you understand the implications of the choices you've made. And I want to help you understand the options that would be available to you if you were to exercise those options as given every taxpayer based on the IRS tax code. And if you knew the rules of the game you're playing, you wouldn't play the way you are. I am convinced of that.
Please repeat it.
Repeat what? Look, we're going to chop this up. And if you like this, Jim, we got to make a note of this. We'll whatever the hell that was, Mehdi, if you like that. I'm known to go off and just rant. And I've got people in the group that go, "Gosh, that was great. What'd you say?" I don't remember. I don't remember. If it was good, great. Again, my job here is to hopefully give every one of us ammunition so we can go out and make a difference in people's lives. That's it. My job is to convince you that everyone should go out and sell 10-pays. It's not what I'm saying. Please don't assume that's what I'm saying. What I am telling you is that there are stories we can have where we can get our points across without going, "You're doing it wrong, you're doing it wrong, you're doing it wrong, you should do what I say." And I'll leave you with this. I don't want to pull you to something that I believe or push you into something you never will believe. I want to create a relationship with you and walk through this financial journey together and make sure you don't make a financial mistake. That's my goal in life. And every single one of us can do exactly the same thing when it's built on a core, visceral belief. And Mehdi, I'm hoping after all this, you still believe variable life is the most powerful product in the world and everyone and their brother should own it. There's plenty of room for everybody. Anybody else? Ross, I like your picture. Are you as nice a guy as what your picture makes it look like?
Hey, Tom, I'm still in my mind. I'm still trying to wrap around what you mentioned about the 10-pay being paid fully at the 14th year. I thought that by the 10th year, it's already paid for.
No, I said you can pay the premiums in year 14. but you're paying the premiums by paying back the loan because the insurance company made all those payments for you that you missed. See, what I like about the 10 pay is the premiums are paid every year, but just not by you.
So
They're
you stop
paid for by the
paying
company.
at year 3. You can stop paying at year 3, not pays year 4 through 10, but then you can pick up in year 14 and pay the premiums that you didn't pay. So if there
Plus
was a,
interest. Plus
yeah,
interest.
no, yeah.
Yep. And with non-direct recognition companies, you have exactly the same amount of cash value had you paid the premium in full every year. Medi, you can't do that with variable life. I borrow money out, who knows what it'll be worth when I pay the loan back.
So one of the things that I know you don't want to answer, I wish I knew which carriers, like were the strongest carriers like that you work with. I had one that is no longer a mutual company. Now they're a stock company, and it's like, you know,
Yeah, if private message me or contact me info@thebreakawayleague.com.
okay.
That was a hard lesson to learn.
Boy, tell me about it.
All right, so let me see. Tom Reddick, you're the man. Thank you. Thank you, Tom, because without you, I would be crap. Let's see. The professionals farm. Thank you, Jim. Why invest cash in other people's business using stocks and bonds? You're gonna That's a great question, David. info@thebreakawayleague.com. All right, anything else? Is this fun? Feel
Yes,
like we're
it
learning
is.
something?
Yes.
For $4.97. You want more of this? Because I tell you what, right now it's going to be a smaller group, but if I have my druthers, we're going to have to expand Zoom's capacity to have more than what we have paid for so that I can have more of an impact on people's lives than I have already. We will see. Steve, were you going to ask a question? No? Scale of 1 to 10, what's your takeaway, Steve?
I'm always a skeptic. So I'm already at about a 7 or an 8.
Woo!
So I knew that you were going to say that. But yeah, I've already pulled up.
Where were you when you started? Where were you when you popped in? 2
Oh,
or a 9? Heaven forbid if it went from 9 to 7.
I was probably about a 3.
Okay.
But I hadn't really read all the introductory emails and so forth. And I just went ahead and registered for the event. And then as I've been listening, I'm a whole life guy. I don't think there's anything better on the planet. Sorry if you like other stuff, but I'm not into variables or ULs or IULs. I think that by the time that you're 65 or 70 as the insured, it doesn't hold water against a whole life policy. So
Right.
sorry if I offended anybody, but I step on toes all the time.
That's our job. My job is to piss people off on a daily basis. I try to do that. Sometimes I succeed more than I wanted.
Yeah. Good
Well,
stuff.
Hey, by the way, we have a new Facebook group called For the Love of Whole Life. Yes, pun intended. For the Love of Whole Life. If you do want to register for that, we'd love to have you. My goal for that group is for me to interview people who use whole life insurance and make a difference in people's lives. Mine is one way to sell insurance, but our average premium is $77,000 and we've written about 50 million of premium in 10 years. So it's pretty easy to find money, I think. But that's just one way of selling insurance. So I'm going to be interviewing people who sell insurance differently. I think there's, like I say, there's enough to go around.
Do you have any material as far as all the different ways to use your cash value during your lifetime? I mean, buying a car, taking a vacation. Yeah, I get that. Buying a tree stump or, remover or whatever.
Right.
But is there more to it? Because I'm sitting on a lot of cash and I'm not using it hardly. I use it, but not to the maximum that I could.
So I'm going to show you how to put all that to use for you, and I'll even split the commission with you.
Oh, okay.
Look, there, when we're putting together a whole program now, we are marketing the crap out of me, and this is sort of humbling on my end. So there are things we are going to be offering, Melissa. We have courses like objective training, how everything you do is a singular bite. We've all heard the joke, how do you eat an elephant? It's literally one bite at a time. Yet we as salespeople speak in run-on sentences, and by the time we're done speaking, we take a breath of fresh air. So you want to buy? Are you ready to write a check? So we've got a course that's objective training, how to do everything with one specific objective of mind, and we are going to stack many objectives on top of one another. But we've got courses called explanation of services, turning clients into advocates, conversion point analysis, where during the selling process there's multiple different objectives within moving a client from A to Z, different language, different objective, different intent, and we need to know what each of those are. So we do have those capacities. I'm writing a book right now that we're also going to be offering here pretty quick in the next couple of weeks for another whopping $4.97, just to get you into some of the things that we do here in the Breakaway League. And also, if you're really interested, jump on the breakawayleague.com. Look at the website. Take a look at we as financial advisors from around the country and traditional life insurance salespeople, how we use life insurance to do things that very few people are actually doing. We help educate people on what they've done, and we give them choices on what they can do. And that, by the way, is not taught anywhere. I don't know where you can go get stuff like that. So the content we're trying to put together, Melissa, is very specific to what we are trying to accomplish here. So do me a favor, share, post, like, all of that stuff. Get emails out and just pass along to everyone you possibly can. The more we can turn our industry around to realize, my favorite quote in the group is, you're about to get a pay raise. It will become effective the day you can be. And when you finally take your job seriously, then the day your income can soar. But it's not about the government. It's not about the company you represent. It's not about the dividend history. It's you. What can you do to better yourself? And we're starting with these weekly wisdoms, and it's conversation starters. It's theory, it's concept, it's motivation behind something we believe. So there's enough in there that we've shot already that many people can get their arms around and start developing stories around that. But every week we're going to be inundating you again with another weekly wisdom. Anybody else? Appreciate your attendance. Looking forward to continuing this. And hopefully we'll see you all at the Professionals Forum in February. Thanks, everybody.
Thanks, Tom.
Yeah, everyone.